Hi, and welcome to a 5-minute tax update for May 2018. The aim of our tax update is to brief you on the most important tax developments. So let's set the countdown clock and start. We will start by looking at the most important developments in local legislation. The bill mentioned in our previous webcast on the extension of the submission deadline of the tax returns has now been voted into law. Although the law has yet to be published in the Government Gazette, we understand that the law gives the power to the Commissioner of Taxation to extend the deadlines for the submission of tax returns for 3 months where it is deemed necessary. We also understand that the law has set a submission deadline for the 2017 tax returns of 31 October 2018. In addition, the Commissioner can extend the due date for the payment of the tax to coincide with the submission date. Now, with regards to the 2017 personal tax return, the Tax Department announced that it is expected to be uploaded on the TaxisNet system in the beginning of June. As per the announcement, the delay was mainly due to tests performed on the system so as to avoid as far as possible any unforeseen complications. In addition, we understand that certain changes were made to the system which allow for some of the fields to be completed automatically. On the 4th of May, the House of Representatives voted into law 2 bills which deal with VAT and transfer fees on leasing of immovable property. We have with us our indirect tax services partner, Christos Papamarkidis, who will briefly update us on these 2 changes. Christos?
Thank you, Pieris. The first amendment is in connection with the position of VAT on specific long-term leases of property. Up to now, the purchase of property was subject to the standard rate of VAT 90% or to the reduced rate of 5% if the property used as the main residence of the purchaser, whilst the long-term lease of property was exempt from VAT. The long-term lease of property will now be treated as a supply of goods and will be subject to VAT. We understand that this is an anti-avoidance measure and also ensures the equal treatment between the acquisition and lease of property. The second change relates to the payment of transfer fees to the Department of Land Surveys for long-term lease or sublease of property to a person which is now subject to VAT. Under the new law, such a lease will not be subject to the payment of transfer fees, as it is the case with the purchase of immovable property. Back to you, Pieris.
Lastly, on the local developments, and as mentioned in one of our previous webcasts, the government has drafted a number of proposals to provide tax incentives to encourage film and sound production companies to set up business in Cyprus. The relevant bill has now been submitted to Parliament for discussion at the relevant parliamentary committee. As a reminder, the main provisions include a cash rebate or a tax credit for companies that meet certain conditions, a tax deduction for companies that invest in film infrastructure and equipment, and a reimbursement of VAT on eligible costs. It is expected that the implementation of these provisions will bring economic benefits, promote cultural activities, and place Cyprus in the international filming scene. Moving on to international developments, in late April, the European Commission issued a press release announcing a draft directive that would introduce common procedures for a company to move from one EU member state to another. Currently, the rules of the member states differ considerably, and there are also administrative issues which discourage businesses from pursuing new opportunities. With the proposed new company law rules, it will be possible to create a company fully online, including across borders, and to move, merge, or divide a company across national borders within the European Union without incurring unnecessary burdens and costs. The new rules will be accompanied by adequate safeguards against abusive arrangements and at the same time protect the interests of the stakeholders. Let's now look at the recent tax treaty update. On the 18th of May, Cyprus signed a tax treaty with Andorra, which is yet to be published in the Government Gazette. The treaty provides for nil withholding tax on dividends, interest, and royalty payments. We will close off today's tax update with a brief reminder of the deadlines coming up. The 30th of June is the deadline for the payment of the special defense contribution on rents, dividends, and interest from sources outside of Cyprus for the first 6 months of 2018. The 30th of June was also normally the deadline for the payment of the tax balance for the tax year 2017 through self-assessment by individuals who do not prepare audited financial statements. We understand that this will be regulated with an announcement from the tax department or in the law mentioned earlier when this is published in the official gazette. This concludes our tax update for this month. Thank you for watching.